Welcome to the deep dive. Today, we're getting into the latest from Bajaj Finserv, specifically their Q4 FY25 investor presentation and the conference call that followed.
Right. And Bajaj Finserv is not just one entity, is it? It's quite diverse.
Exactly. You've got the lending side with Bajaj Finance, Bajaj Housing Finance.
Mm.
Then there's the big insurance players, Bajaj Allianz General and Bajaj Allianz Life.
And those emerging businesses, too, like Bajaj Finserv Health, Bajaj Markets.
Yeah,
They're becoming quite interesting.
they are. So our mission today really is to pull out the key insights, the performance details, the strategic direction, basically what you need to know from these latest updates.
Yep, we've sifted through it all to find the signals, figure out what it means for their overall health and where they might be heading.
Okay, let's kick off with the big picture then. Bajaj Finserv's consolidated performance. How did they do overall in Q4?
Pretty solid, actually. Consolidated total revenue for the quarter, up 14% year-on-year. That's 36,596 crore.
And for the full year?
Even stronger growth for the full year, 21% year-on-year, hitting 1,033,822 crore. Shows real momentum, doesn't it?
It really does. That kind of growth across the board speaks volumes. What about the bottom line, the profit after tax?
Paid growth was also positive. For the quarter, it was up 14%, reaching 2,417 crore.
Okay.
For the full year, though, it was a bit slower, up 9% to year's 8,872 crore. Still healthy, but, not quite matching that top-line growth pace.
Right. Still, growing profit on that scale is significant. Any other headline consolidated numbers?
Yeah, their standalone net worth saw a really strong jump up 27% year-on-year, landed at 8,372 crore. That really shores up their financial foundation.
Definitely. What about strategic moves at the top level? Anything major announced?
Well, the big one is the share purchase agreement with Allianz. They're moving to acquire Allianz's stake in both the insurance ventures General and Life.
Ah, yes, that's been talked about. Still pending regulatory approvals, I assume.
Exactly. Needs the green light. But if it goes through, getting 100% ownership,
Yeah.
that's a game changer.
How so? What does that unlock for them?
Well, think about it. Much more control, more strategic flexibility. How they integrate insurance, how they develop it. Maybe even international moves down the line. We can probably circle back to that.
Good point. Anything else on the consolidated front?
Just a note on Bajaj Finance Finserv proceeded with converting those warrants issued last year, paid the remaining 75%.
Right, so essentially boosting their stake in BFL.
Yep, a clear sign of confidence in their core lending engine.
Okay, let's zoom in a bit then. Starting with Bajaj Allianz Life Insurance BALIC. They've got this BALIC 2.0 strategy, right? Focused on sustainable and profitable growth.
That's the line, yeah. And it comes alongside adapting to those revised product regulations that impacted the whole industry.
So how did that play out in Q4? What were the key performance indicators?
This is where it gets kind of interesting. Their value of new business, the VNB, think of that as the future profit locked in from new sales.
Yeah.
It actually grew 14% in Q4.
Okay, 14% VNB growth. But what about premiums?
That's the twist. Their retail-weighted received premium, RWROP, which is basically the premium collected from retail customers, that was flat year-on-year.
Flat premiums, but VNB up 14%. How does that work? Especially when the industry RWRP only grew about 3%.
It signals a very deliberate shift, doesn't it? Yeah. They're not just chasing premium volume. They're focusing on the profitability of the business they write. Quality over quantity, perhaps.
So it's selling more profitable products.
Looks like it. And the standout here is retail protection. Massive growth, up 84%.
84%, wow. What's driving that?
Seems to be a bigger push on higher protection UIPs, those investment-linked plans, and also more people taking up riders, those add-on benefits.
Right, and protection products generally carry better margins, I suppose.
Typically, yes. So that directly fuels the VNB growth we saw. It's a strategic lever they're pulling quite hard.
Makes sense. Did this show up in their margins too?
It did. The new business margin, NBM, basically profit per unit of premium, climbed to 22.1% in Q4. That's up significantly from 18.1% last year.
That's a healthy jump. Any other positives for BALIC?
Renewal growth was strong too, up 29%. So existing customers are sticking around, keeping their policies going.
Good sign for long-term stability. But what about their overall profit after tax? I saw that was down.
Yeah, PAT did dip in the quarter. Came in at 41 crore, down from the outer 106 crore a year ago.
Why'd they drop?
They pointed to lower investment income, likely due to market conditions, and also a higher tax provision.
So maybe not reflective of the core insurance performance.
I'd argue that yes. The underlying metrics like VNB, NBM, renewals, they look pretty robust. The overall new business growth was muted, sure, but that was kind of an industry-wide thing with the surrender rule changes and market jitters. The key takeaway feels like that shift to profitable growth is working.
And they're backing this up with action, expanding distribution.
Seems so. They mentioned evolving the product mix, obviously with that big push on protection, 63% growth for the full year there. And yeah, expanding direct sales using data analytics, plus being present in over 400 cities now.
What about policy retention? Persistency?
Stable compared to last year, they said, which is decent given the market environment.
And their financial strength? Solvency?
Very strong. Solvency ratio at 359%. That's a huge buffer, way above the regulatory minimum. Provides a lot of comfort.
Like a big safety cushion.
Exactly. Protects against unexpected shocks.
And looking forward, any targets for Bajaj?
They gave some guidance for FY26 and FY27. Expecting growth in annualized premium and VNB, still leaning heavily on protection for that growth, with the rest of the product mix staying relatively stable.
Okay. Anything else on the nuances? Like the embedded value walk?
Ah, yes. The operating variance and assumption changes there. They said it was mainly tied to persistency, especially in newer segments, and some surrenders kicking in for ULIPs after the 5-year mark, the 61st month.
So maybe still figuring out customer behavior on some newer products?
Could be. Or policyholders reacting to markets with those ULIPs. But importantly, they said mortality experience was right in line with their assumptions.
That's reassuring. And one last point on Bajaj, their reliance on bank partners.
They mentioned their largest bank assurance partner brings in about 22% of the business.
Significant, but not overly concentrated.
Seems that way. It came up on the call, actually. An analyst asked about that partner potentially buying a rival insurer. Management sounded confident about the relationship and stressed they weren't overly dependent.
Got it. Okay, let's pivot to the other side of insurance. Bajaj Allianz, General Insurance, BAG Weiss. How did their quarter look?
Revenue growth was also 14%, and profit after tax was up 21% if you strip out the mark-to-market changes on their investments.
Ah, the investment volatility factor again?
Yeah.
What was the reported PAT then?
Reported PT was actually down 4%, mainly because they had lower realized gains from selling investments compared to last year.
Okay, so similar story, underlying insurance business doing better than the investment side led on.
That seems to be the picture. The core underwriting looks stronger.
How strong? What about underwriting profit or loss?
They posted a very small underwriting loss, just 3 crores for the quarter. That's a massive improvement from a euro 76 crore loss the previous year. They reckon it'll be among the best in the market.
Impressive turnaround. But then what about the combined ratio? I thought that was up.
It was. Came in at 104.8%, or 103.1% if you exclude the impact of that 1/N regulation.
So still indicating an underwriting loss overall, despite the improvement. Why the disconnect?
Couple of factors. One was a degrowth in their gross written premium, GWP. Less premium base makes the ratio look worse. And they also saw an uptick in claims in the motor business.
Right. So lower GWP puts pressure on the ratio math. Why was GWP down?
Partly the 1/N regulation, partly strategic calls on tender-based business like crop insurance. But even with the ratio over 100, they still expect it to be one of the lowest among multi-line players. Suggests good cost control overall.
Okay. What about their investments under management? AUM.
AUM grew by 6% to 33,115 crores. And return on equity, ROE, looks healthy too, around 16% on a reported basis, but over 22% if you adjust for the surplus capital they hold, which is pretty strong profitability for shareholders.
And customer metrics. How are they doing there?
Still leading the pack, apparently. Consistently lowest grievance ratio in the industry and the highest net promoter score, NPS.
That's always been a strength for them, hasn't it? High customer satisfaction.
Absolutely.
Yeah.
Crucial in a competitive field like general insurance. Builds loyalty.
Now, breaking down that GWP performance, you said overall GWP was down, but were there bright spots?
Yes. If you exclude the volatile, tender-driven stuff like crop and some government health schemes, their growth was actually around 8% for the quarter and 12% for the full year.
And how does that compare to the market?
They said it was better than the overall industry growth, especially strong performance in their core areas, commercial lines, motor, and retail health, outpacing the market there.
But cautious elsewhere.
Yeah, group health, for instance, they see as more tactical. Pricing pressure is intense there. Crop insurance, they pulled back due to aggressive pricing by competitors on tenders.
Makes sense. They also mentioned an elevated commission ratio in Q4. Was that a concern?
They addressed that. Said it wasn't about paying higher rates, but more about the mix of business. A higher proportion of new sales came from motor and retail health, which naturally have higher upfront commissions.
Ah, so a function of growth in those specific areas.
Precisely. Not necessarily a cost efficiency issue.
There were some questions about market share floating around too, weren't there?
Yeah, they tackled that. Basically said, look, in our core focus areas, commercial, motor, retail health, even government health, we're generally ahead of the market.
So where was the share lower?
Crop, as mentioned, due to pricing discipline, and miscellaneous lines apparently linked to slower lending in the cattle finance business, which impacts associated insurance.
Okay, context matters. And that 1 by N regulation, how does that impact things?
It affects how you recognize premium revenue from multi-year policies over time. So it can sometimes distort the view of year-on-year growth if you just look at the headline number.
Got it. What about that tender-based business? How significant is it?
About 25% of their total GWP, they said. It's just part of the business mix for a large insurer like them. You win some tenders, you lose some.
And are they looking to take on more risk via reinsurance?
No, they explicitly said they're not planning to be more aggressive in accepting reinsurance, sticking to their knitting, focusing on primary underwriting.
Okay. Any final data points on BAG investment portfolio details?
Yeah, a few quick ones. Advanced premium collected is around 2,500 crores. The average duration of their bond portfolio is about 5.5 years.
Moderate interest rate sensitivity, then.
Seems like it. And the yield to maturity, YTM, on those bonds is around 8.03%. Gives you an idea of the returns they're locking in.
Useful benchmarks. Right, let's shift gears to the newer ventures. Bajaj Finserv Health. How's that shaping up?
It's a bit harder to track year on year because they only acquired Vital Health, a key part of it, in Q1 of this fiscal year.
Right, so comparisons are tough. But what do we know about its recent performance?
We know transaction volume is growing. Healthcare transactions hit 28 lakh in Q4 FY25. That's up from 23 lakh in Q3. So more people are using the platform.
That's positive momentum. What's the strategic focus there?
They talked about building capabilities for the international market. Apparently, they're already servicing 2 international insurers, leveraging their outpatient department, or OPD, capabilities.
Interesting. International expansion already.
Seems so. But the overall message is, this is a long-term play. They're focused on building value, a large network, strong tech, including AI, not chasing short-term profits.
Building the foundations first. Makes sense for a health tech venture.
Absolutely. It's about scale and capability right now.
Okay. What about Bajaj Finserv Direct? That includes Bajaj Markets, right?
Yes, Bajaj Markets and Bajaj Technology Services. For Bajaj Markets, they added 6 new partners in Q4, bringing the total to 96 unique partners on the platform.
Expanding the marketplace. And loan dispersals.
BFSI lending disbursement via the platform was 1,865 crore in Q4.
And financially? Any milestones?
Big win here. Bajaj Markets achieved cash profits for the second quarter in a row.
Turning the corner towards profitability. That's significant for a platform business.
Definitely a positive sign of maturity and viability.
And the asset management company, Bajaj AMC.
Growing steadily. Total AUM reached 20,365 crore by the end of March.
And how much of that is from outside the Bajaj Group?
A large chunk, actually. 84% is non-group AUM. That's over 17,000 crore from external investors.
Shows they're building credibility and attracting capital in the competitive AMC space.
Exactly. It's not just internal money flowing around.
Quick check-in on the core lending businesses then. Bajaj Finance.
Customer base crossed the 10 crore mark, now at 10.1 crore. Huge scale.
Impressive. And Bajaj Housing Finance, BHFL.
Also strong growth. AUM up 26% to over 1.14 lakh crore. And profit after tax jumped 54%.
Wow, housing finance is clearly firing on all cylinders for them.
Seems to be a major growth engine right now.
Finally, before we wrap up the segments, did they mention ESG initiatives?
They did, briefly. Highlighted responsible investment progress. BAJEC at 92% and BALIC at 87% against their targets. Also mentioned ongoing work in financial inclusion, environmental conservation, and social welfare stuff.
Good to see that focus. Becoming table stakes now, isn't it?
Increasingly so, especially for large institutions.
Okay, so let's try and pull this all together. Strategically, what's the big picture takeaway from all this?
Well, that move towards 100% ownership of insurance seems central. It signals a long-term commitment, right? Gives them options, more strategic control, maybe raising capital later by selling a stake, perhaps pushing harder on international insurance avenues.
And their outlook? Optimistic? Cautious?
I'd say cautiously optimistic. They acknowledged potential near-term volatility, maybe in the first half of the new financial year, but seem more positive about the second half.
What are the key focus areas for the coming year then?
For BAJIC, definitely improving that underwriting performance, getting the combined ratio down. For Balic, maintaining those healthy profit margins, that NBM. And for the newer platform businesses, it's all about scaling up.
So, to summarize our deep dive, Bajaj Finserv shows solid overall growth, but it's a mixed bag across the different businesses, isn't it?
Yeah, definitely varied performance. Insurance is navigating regulations and market shifts, clearly focusing on profitability now.
While the emerging businesses are still in that building phase focused on scale, tech, long-term value.
Exactly. A clear strategy seems to be emerging for profitable, sustainable growth across the whole portfolio, balancing the mature businesses with the future potential of the new ones.
Right. So here's something to think about as we finish. We see this changing regulatory world, increasing competition everywhere in finance. How might that continue to shape Bajaj Finserv's strategy, especially now if they get full control of insurance? Could that unlock completely new directions for them, maybe areas we haven't even considered yet? Definitely something to ponder.
Food for thought indeed.
Thanks for joining us for this deep dive.